the market down 2 days in a row. In fact, over the last few sessions, everybody says it's not time to panic. It's a bearish sentiment creeping in. Everybody just taking a wait-and-see approach post-result season. By March, investors will be back. Do you concur?
And the interesting thing is that this is happening right before earnings season, and you would have thought that people would have been taking profit after earnings season, not before. So it's worrying for me. I don't know what to make of it as of now, but it's also informative to us that interest rates are creeping up as well. So that may have an impact on the market.
It's interesting you say that it's worrying for you, because with the market having improved 37% last year, there's just been a sense that the Kenyan market is going to be on the up. The NSE is going to improve, and hence great anticipation for at least 5 new listings this year on what seemed to be general vibrant activity and increased liquidity. How is this sort of bearish sentiment going to impact on events going forward?
Well, when you talk about the growth from last year, we have to remember that it was from a low base. Some of the stocks that we are seeing are trading at 20 times earnings and above. So you could argue that some of those stocks are on the higher side, but not all of them. So I would have expected that the lower PE companies will have caught up, especially those with good growth, and there are numbers as well. So I would have expected those ones to catch up and the others to trade sideways. But what you have is that you've got thin trading and prices trending downwards, which is a pointer towards a bearish market.
Right. Okay, let's talk about Safaricom. I mean, it's accounted for at least a lot of the foreign interest and the activity that's in the market. The price is fairly stable now, somewhere in the region of 4 shillings 35. What's it going to take to sort of reinvigorate the stock?
For that particular stock, the earnings have to beat expectations, simply because its biggest competitor, Airtel, has really forced down prices, and You and Orange have followed suit, so it has forced Safaricom to slash down its prices. So the issue of note here is the IT segment, especially the data segment. So if that does not perform, does not cover the performance of the deep, or rather,
right,
it doesn't cover the deep in earnings, we might have issues there.
Okay, let's talk about what we're expecting. We've seen a lot of activity on the commercial side, but investors tend to be focusing on the blue chips such as the KCBs, the equities, even Co-op Bank recently. It's expected that we're going to see improvements of about 45% by way of earnings for the banks returning to profitability. But it doesn't seem like these expectations are impacting significantly on the pricing of some of the banking shares. Why is that?
For some, like I argued earlier, they're already trading at significantly high PEs. So that might be a fact. I mean, they've probably been priced in the prices of the stock already. So what I would have expected is smaller banks to benefit from such news. But then again, when you look at companies like Diamond Trust and NIC Bank, and look at how much they've grown over the past 1 year, but perhaps investors are skeptical that they could grow any further, so they're probably holding back, awaiting earnings season.
Okay, on the tourism and services side, there's also been some interest. Kenya Airways reported a 23% improvement in passenger figures, largely due to an expansion of routes, but it doesn't seem like it's going to impact on earnings. Why is that?
Oil, I would imagine oil, because if oil is expected to trade higher and higher, and on the revenue side, KQ has lost some pricing power. You can see that in the way they're having to compete with their local rivals. So that could have a negative impact on revenues. So I guess the market is expecting thinner margins, and by so doing, the price will not, unless earnings suggest otherwise, we will not probably see growth in that stock.
And very briefly, I mean, our time's up. There's news of proposals for a strategic investor to buy off some of the debts and liabilities of Standard Assurance Company. Is that going to reinvigorate the insurance sector in any way?
You see, Standard is not really listed, and most insurance companies, actually we've got only two listed and one reinsurer, which is Kenya Reinsurance. So and if you look at the insurance companies, the way they trade, they're trade thinly. So that may not arouse the stock market so much. We've got to wait and see. Perhaps if British American is introduced in the market and insurance have positive growth, then that may help.